Let's talk about March market updates. Hi, I'm Amber Coleman with Guild Mortgage, and this is I don't even know if I want to say exciting time, but this is quite a different time, right? So here's what we're looking at in March. And first I'm going to talk about interest rates, and then I'll talk about the market, okay? So as far as the interest rates are concerned, everything is kind of based off of what's happening with Russia and Ukraine. So what we're looking at right now is that oil prices that are coming out because of what's happening over there, their financial market that's happening in Russia. What we've seen is that investors that would normally invest in Russian companies, because of what's happening with their dollar, due to what's happening with the war, or what's comparable to their dollar, that a lot of those investors have taken their money out and they're putting into safe haven bonds, which is in the US. And when they put it into safe haven bonds, that helps our market out. So basically what's happening is that on days that happens, we see better rates. And then if things happen with the stock market, that money's pulled out and put into the stock market. So what we're seeing right now is a lot of this going on. And it all has to do with what's happening over there. So when the market switches over to talking about inflation, then that causes everything to go crazy again, because inflation in the world of interest rates means higher rates, right? So when there's news that's released that says the cost of a barrel of oil has gone up more, which it has, then that's going to be inflationary, because that's going to hit my pocketbook and yours, right? So the cost of everything is going to go up with it. When that happens, the feds have to take action with the interest rates, and then we see higher rates. So that's why right now when we have news that's negative about what's happening with the financial system in Russia, then we get a bump in our bonds, which makes our rates go down. And then the next day when something's talked about with inflation, then everything goes back up. So right now we're doing a lot of this. And I'm expecting for the near future, especially the month of March, that we're going to continue seeing a big roller coaster ride just like that. So if you see a rate that you like, I would go ahead and lock it. Because chances are that the next day it could be different. That's how fast I'm seeing it turn right now. Day to day, you're seeing different things come out and they're affecting the markets in different ways. So if you're looking to get a loan right now and you're looking to lock in a rate, if you see it and you're comfortable with the payment, lock it in, because you don't know what's going to happen tomorrow, basically, is what I'm trying to say. As far as the market goes, as far as the housing and the amount of houses that are on the market, it's just as low right now as it was last year. And I did look at rentals, because rentals, most people aren't looking at rentals, but rentals are causing a lot of what's happening in our housing market, and the inventory shortage. A lot of that's caused by rentals. What's happening with the rentals is the prices. If you're renting a house, you know all too well, the prices are moving up and up. Landlords are in 1 month raising your rent by $300, $400. I've heard huge amounts of rent, of what they've increased rents by. But that's because the market is dictating it. There's not a lot of rentals out there. And what there is, it's a high price to get a rental property. And so that then people are then flowing into the housing market to buy a house. And then when you buy a house, there's a shortage of inventory, because there's all these extra people coming in because they can't rent anymore, and because the builders aren't building fast enough. So we still have an inventory shortage. Every prediction that was out there this year was expecting that what we gained in equity as homeowners was going to be less than last year. Pretty much all of the economists that put out expectations before 2022 began have now switched that around, and now they're expecting to see similar to what was last year, because of the lack of inventory. And the rental market directly feeds into that lack of inventory. So if you're looking to buy a house, you want to be able to search with somebody who's very aggressive, like who's going to go and negotiate for you, because you're going to be fighting it out a little bit and you need a negotiator. I'm happy to hook you up with the best agents in town. I work with the best agents in town. So just let me know, when we're going out looking, if you need an agent, let's hook you up with the best negotiator out there. That's what you need. You need top producers at this level in the game right now. Anyway, if you have any questions, if you want me to run a game plan for you, if you want me to run numbers for you, I'm happy to do that. If you want any more information as it pertains to you, and just to pick my brain on what I think is coming next, feel free to reach out. I'm going to leave my information right on the screen for you. feel free to call me, text me, email me, and I'm happy to have a conversation with you. And by all means, let's get you in your house. If you like this video, I would love you if you subscribed and push the like button. And I hope you have a great day.